Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to Mastering Accounting Skills. First of all, I would like to thank each and every one of you for all the appreciation I am receiving in shape of emails, likes, comments, and suggestions for the new stuff that you are looking for. Even some of my viewers, they are contacting me for paid training, but due to my busy routine, it is not always possible for me to entertain all of your needs. I'm really sorry for that. My priority is to share my knowledge free of cost. I don't want that you pay any cash for any training. Your feedback, likes, and comments is enough for me. Thank you and stay tuned to learn more cool accounting skills. So guys, today our topic is VAT accounting. So we will discuss about VAT, what is VAT, and how we will do the accounting for VAT. And in this video, one by one, we will discuss what is VAT. After that, we will see what are the mandatory records to be maintained for the VAT. Then we will see what is the legal invoice, VAT invoice format. After that, we will go and we will see that what is the concept of input tax and output tax, and how to calculate a VAT return. After that, we will see accounting entries for the VAT, what we will pass in our system, and finally VAT law in UAE or in any other country. So we will see how we can learn about the law for the VAT. First of all, we will see what is VAT. VAT stands for Value Added Tax. It is a consumption tax that is levied on the value added to the goods and services at each stage of production and distribution, and ultimately, finally, it is being borne by the final consumer. The amount of VAT is calculated as a percentage of the price of the goods or services, and it is paid by the seller to the government. However, businesses can deduct the VAT what they have paid on their purchases from the VAT what they have collected on their sales. So the overall burden of VAT is not on the business, it is borne by the final consumer. This we will see later that how it is. So here in this sheet we will see that how the VAT is finally paid by the final consumer. So there here we have producer. Okay, then producer will give this item to the distributor. Distributor will sell this item to the wholesalers in the market, and the wholesaler will sell to the retailer, and retailer will sell to the final consumer. Okay, so what is the price producer is charging? Suppose he is charging 100 dirham. Okay, so if the VAT is 5% VAT, we will charge, so it will be 105 price after the VAT. Then the distributor, he will sell the same item, he will buy at 105 and he will sell with his margin at 110 dirham. Okay, so when we will calculate 5% VAT on 110, so it will be the price will be after VAT 115.5. Then this distributor will sell this item to the wholesaler at this price 115.5, and the wholesaler, after making his margin, he will sell the same item at 115. When he will sell this item, there will be VAT 5.75, and the price selling price will be 120.75. Then this wholesaler will sell this item at 120.75 dirham to the retailer. Then retailer, after keeping his margin, he will sell this item suppose at 125. Okay, so the VAT will be 6.25, and the price what the retailer will charge to the consumer, it will be 131.25. So how much the total VAT during all these distribution channels? It is 22.5. So 100 dirham plus 22.5. The other amount is the margin for the each distribution channel for the distributor, wholesaler, and the retailer. So like this, the final consumer will pay 22.50 VAT on this item. And what VAT the producer will pay to the government? The producer will pay only 5 dirham VAT to the government, okay, not from his pocket. He will charge this VAT to the distributor, and he will pay deposit this amount to the government, 5 dirham on this item. And how much the distributor will pay? Distributor will pay, he will charge his customer 5.5. So distributor will pay 5.5 minus this 5 dirham what he is charged by the producer. So only 50 fils he will pay to the government for this item. Then how much the wholesaler will pay? Okay, the wholesaler will pay 5.75 what he charged to his customer minus what he paid to the distributor. So 0.25 it will pay to the government for this item. And how much the VAT this retailer will pay to the government? 6.25, okay, what he charged to its customer minus 5.75 what the wholesaler charged to the retailer. Okay, so the retailer will pay 0.50 VAT on this item to the government. So like this, all these distribution channel, they are not paying any tax from their pocket, okay, only the difference of the VAT. That's why it is called value added tax, because 10 dirham they have increased the price, so they will pay to the government only for that 10 dirham, okay, and not even from their pocket. They will charge it to the customer, okay. Distributor will charge to the wholesaler, wholesaler will charge to the retailer, and retailer will charge this amount to the final consumer. Like this this work. Now we will see what are the mandatory records to be maintained so by each business. So first of all, each business must maintain a complete record of sales invoices. The businesses must have a complete record in the accounting software for all the sales invoices during the period, and also the physical sales invoices must be filed in the office record. Secondly, the credit notes for each sales return. A credit note must be recorded in the accounting system, and the physical copy of that credit note also must be maintained. At third, the purchase and expenses bills. For all the purchases business is making to resell in the market, they should have complete record for that, and also for the expenses like fuel expenses, if there is any VAT paid, or utility expenses. So all these bills must be recorded in the accounting system as well as in the physical files. It should be available. Then the debit notes for all the returns to the suppliers. A business must have the complete record in the accounting system as well as in the filing record. Then the delivery challans, okay, for the sales they are making, they must have the delivery challans for that, okay, that is also compulsory to be maintained. Then bill of entry for import of goods. If on the port and while importing the goods into the country, if business has paid any VAT, so they should also keep the record of that bill of entry, okay, and it must be recorded in the accounting system, and also the physical paper bill of entry also must be filed in the filing record. In next slide, we will see what is the legal sales invoice format required by the VAT law. So the first of all, each sales invoice must have the title as tax invoice, okay. Secondly, it must have a unique invoice number on it, and also the invoice issue date also must be clearly mentioned on the sales invoice. After that, the name, address and tax registration number of the seller and the buyer. tax registration number is very important, because in the market in the same name there may be possibly a lot of businesses available in the same name, but how they will identify themselves with the tax registration number. So on the sales invoice, the seller and the buyer both tax registration numbers will should be mentioned. Then the detail of goods and services. What is the detail of goods? Its complete description must be mentioned in the sales invoice. Then gross amount exclusive of VAT. After that, the VAT amount, okay, on the invoice, and the net amount inclusive of VAT. So this is the sales invoice format that almost under all the VAT laws they will require these things in the sales invoice format. Now we will see what is the concept of input and output tax. For to understand this, we will see one example in Excel. So here a business, for example, we will see that the business will make an invoice of 5,000 dirham, and the 5% VAT will be calculated 250, and the item they sell for 5,000 they have purchased for 4,000 from the market, and after keeping their margin they sell for 4,000, and there is also 100 dirham they have spent on the fuel. So as you can see on the expenses like purchase and other expenses, the VAT is calculated and it is coming in input tax, okay, and the output is what VAT we are collecting on the sales. So whatever the VAT you are collecting on your sales and revenue, it will go to the output tax, and whatever VAT you are paying on purchases and other expenses, it will be known as input tax, okay. So I hope you understand. And for the output and the system, all the accounting systems, they are preparing record for this. So for the output tax there is a ledger, okay, it is showing that from this sales invoice we collected this much VAT, okay, for all the VAT entries it is coming, and the balance for the output tax it is showing like 4,066.58 during the month of July 2022, okay. So this is each accounting system is maintaining these ledgers. So and the input tax ledger is also there. During the month of July there is 3,229 dirham. This is the VAT the company has paid on its purchase and the expenses. So this output and input tax, both ledgers, they are maintained in the chart of account. Output tax is encountered in other current assets in the chart of account, and input tax output tax is as a other current liability, and input tax it will come in the chart of account as other current assets, because against this output tax what you have collected from your customer you will claim this amount. So this is claimable amount, so that's why it will be in your assets. And this tax what you have collected, this is payable. So this payable minus this what you have paid already, so it will be your net VAT payable. So like this is the concept of input and output VAT. And whenever you are making any VAT return, so at the end of each VAT return period, these ledgers must be the balances should be transferred to the net VAT payable account, to the VAT return, okay, and it will be zero. We will see it in future. Now in next slide we will see how to calculate a VAT return. For this also we will go through an example in the Excel sheet. So here as you can see we have input ledger and the output GL, both GL available here. So this is the calculation of net VAT, okay. So this for we will go and output VAT. We will see here how much it is coming, 4066, okay, for the month of July. If we are filing the VAT return, so this is the output VAT for the month of July. And how much the input VAT? It will come from here, from the GL of input VAT as of 31st July 2022. So this will be, so 837, this is the liability. So this you will mention here that this is my net VAT payable, okay, and this you have to pay to the government. Here a question may arise in your mind that how we will get the figure of the sales and purchase on which we have paid this VAT. So this some accounting systems, they are giving this report, and in some customized softwares the businesses, they will ask the developer to maintain these reports for them. But if your software is not providing you the report, so how to get this figure? Like here we are paying 5% VAT, so this amount is 5%, okay. So you can calculate, you will divide this amount by 5 and you will multiply it with 100, okay. So this will be the amount of the sales on which you have paid this VAT. Secondly, so same formula you will copy here to get the value of the purchase and expenses, okay, because here in the UAE, when you are filing your VAT return, you have to mention that how much you sell and how much you collected VAT on that sales, and also they will ask you how much you have purchase expenses and how much you have collected VAT on that purchase expenses. So this figure you need to calculate. So if it is not, your software is not providing you this report, so like this, for using this formula you can calculate this amount. To calculate to double check that this amount is correct or not, just calculate here again the VAT at the rate of 5% on this amount, okay, 5%. See, it is giving the same amount what is here, okay. So this is just to double check that you have calculated the figure correctly. You will just calculate 5% VAT on these purchase and sales figure, okay. So like this you can get the figure of the purchase and sales on which you have collected or you have paid the VAT to the suppliers. Now viewers, we will see the accounting entries for VAT. What accounting entries we have to make in our accounting system, or this some entries will come automatically through the accounting softwares when we will make a sales invoice or we will enter a purchase invoice. So but what are the entries system will pass at the backend in the database, okay. So to know about this, we will go through, we'll make these entries in Excel, okay. So to record the purchase, what entry we will make, to record the sales, what entry we will make, then to record the VAT return, to record the VAT payment, what will be the entries. So first of all, we will see how to record a purchase. When you are recording a purchase, you will give debit to the purchase, okay. Purchase you will give debit, and you will give credit to plus you will give another debit to input tax, and the credit will be to the accounts payable. Okay, if you did not pay, it is a credit purchase, then you will make this entry. Okay, so like suppose you have make a purchase of 4,000, so the 5% VAT will be 200, and the amount of amount you will give credit to the accounts payable, it will be 4,200. And if you have paid cash, so here it will be cash or bank, anything, whatever you have paid, you can make this entry. And to record a sales, you will give debit to accounts receivable. Okay, and you will give credit to output tax and another credit to the sales. So like this, sales, like suppose you have sell for 5,000, so 250 will be the VAT, and 5,250 this will go to your AR balance. Okay, if it is a credit sales. If it is a cash, then you can give debit to the cash or bank, or the check you have received, then notes receivable you can give. Then it is coming how to record a VAT return. So this, when you are going to record a VAT return, you have to give debit to the output tax. Okay, and you will give credit to the input tax. Like this, you will make your ledgers on that particular date of the VAT return period. For that period, you will make your ledger 0. Okay, and the net VAT payable will be credit. Okay, so just we will take this example, how much VAT on output tax is 250. So we will make here 250, we will give it a debit. Okay, and then we will give credit how much input VAT we have collected, 200. So the remaining balance of this 250 minus 200, so 50 dirham, this is your net VAT payable. Okay, you will give the description that this is my VAT return for the period from 1st of July 2022 to till now. Okay, so this we have like this, you can see when you are passing this VAT return entry, your GL for the output tax, it will become 0 on that particular date. Okay, so this entry on the month end closing, okay, when your return period is finished, you need to pass this entry to show the net VAT payable liability. Okay, and on that month end, your ledgers GL for the output tax and input tax, it will be 0, because here input tax has 200 dirham debit, here we give credit to 200 dirham, so input tax ledger is 0. Then 250 we have credit here for the output tax, when we will give debit with 250 dirham debit to the output tax, so automatically this ledger will also become nil, 0 balance. Then we have a net balance reflecting in our VAT return GL, or you can name it net VAT payable, or you can also name it as VAT return. Okay, whatever name you write, you can write in your chart of account. So VAT return, so this is our VAT return 50. So this is to record the VAT return in the system. Okay, at the to close the month, you have to pass this entry at each month end. Then this VAT return, when you are making the payment, what you will do, you will give debit to VAT return, and credit you will give to bank or cash. Okay, with this 50 dirham, Okay, like this, your input tax, output tax both are zero, and the VAT return, when you have make the payment, it is also zero. Okay, here you have the balance, credit balance for the VAT return, here you give the debit, so the VAT return GL also zero. So like this you are passing accounting entries for VAT in your system. Okay, this is these purchase and sales entry I have passed as per the periodic inventory system. So how to pass these entries under VAT in periodic inventory system, this you can watch. I have make a complete video on this periodic versus perpetual inventory system. So there you can see in case of perpetual inventory system how you will pass the purchase and sales and entry in accounting. At the end I will like to explain something about the VAT law. So each country where the government is charging VAT, implementing VAT on the businesses, so they are also providing the VAT law. Okay, in the it is available on the government website. So like here, if I come on Google and I write here VAT law UAE PDF, okay, I want to read this law. So here it is tax.gov.ae. This there is PDF available for this law. So similarly for the other your countries, you can also find on the government websites what is the VAT law prevailing to your country. So why it is important? Because there are different rules for each business. Like I am working in a medicine company. Okay, so when we are buying any medicine from the market, it is on 0%. On the medicine in UAE there is no VAT, it is 0%. And there are some items which are exempt from VAT, so some items which is chargeable to VAT at the rate of 5%. So you have to go through the law. So whenever you are joining any company, you need to see that what item you are selling and what VAT law in your country it is telling about that item. Is it chargeable to VAT, or is it 0%, or is it exempt from the VAT? So this you need to know. So for that you can go to any government website, you can download this VAT law. Okay, when I click here, so it will give me the PDF, okay, for the law. And this, if you download it and you open this in the PDF format, so this is a searchable version. Okay, so you can write any word, like you want to see the VAT rate, you want to see VAT return, you want to you will write, it will search for you that word in that law. Okay, so it is searchable format of the PDF. And also on the internet, in some countries they are providing this VAT law, so you can just go there and you can search what you want. You can search about your business, your particular business. So this is very important. Whenever you are joining any new company and you don't know about what expenses you can claim as input tax in your VAT return, you need to know it. Okay, there like here in UAE, like fuel expenses for the business, for the vehicles who are completely under the use of business. Okay, for the purpose of business, they are you are using that vehicles, so you can claim the VAT on that fuel bill. But the vehicles that you are using in your personal use, that you cannot claim that VAT. Similarly, in UAE, there is a law that you can not claim the expenses of refreshment, entertainment, what you are giving to your staff. But what you are giving refreshment or anything to your customers, you are making some parties for your customers to sell, to make your sales good or anything else, that you can claim. But for your staff, for yourself, you cannot claim that bills in the in your VAT return. So that's why I suggest you that whenever you are joining any company, just go there. It will take 10 minutes, 15 minutes, 30 minutes, or maximum 1 hour. So one time you will see that okay, these law rules belongs to the business where I join as an accountant. So that's why this is I will recommend that you go to the VAT law. Okay, even if you know it, just one time go there and be sure what you are recording in the system, because when the government authorities, they will come for your audit of the tax and there is something you are recording wrongly, so it will be they will make penalty on your business, so it will not be good for you. Okay, I hope the knowledge we have discussed in this video will add value to your professional skills. So stay tuned and give your feedback. If you like this video, hit the like and write your comments and share it with your friends. Thank you so much.